I'm Matt Bouchard with REIT.com here in La Quinta, California for REALwise 2013, NAREIT's Law, Accounting, and Finance Conference. I'm joined today by Nancy Anderson, the Vice President of Financial Reporting and CFO with REALpac. Nancy, thanks so much for joining us.
Well, thank you for having me.
How about you start by giving us an overall assessment of the health of the commercial real estate market in Canada and how are fundamentals shaping up across the various sectors?
So nationally, it was a very strong year for Canadian commercial real estate. In 2012, we saw rents trending upward. We saw an active and liquid investment real estate market. And we're expecting a lot more of the same for 2013. However, that will be impacted by what happens in markets outside of Canada, of course. In terms of the sectors, the office sector, leasing activity continued. We had leases expire, some tenants expanded, some consolidated. So a bit of running on the spot for that one. Industrial, we saw some modest gains. Retail sales were fairly flat in 2012. Canadians continue to be cautioned about the slowing housing market and rising household debt. So that can explain a lot of that, I suppose. And in terms of multi-housing, apartment properties continue to command really premium pricing, even on some of our aging buildings, that type of thing. Vacancy is really low. In 2012, I believe it was slightly above 2%, and in 2013, it's expected to fall below 2%.
And now drilling down more specifically about the Canadian REITs, what major trends are you seeing there?
So Canadian REITs are performing really strongly. They continue to be a favorite. They continue to be dominant in the space. For example, I think something like just shy of 40% of all transactions were by REITs in 2012. So we also continue to see premium pricing and a lot of that's coming from multiple bids that are happening on properties, so that makes a lot of sense. And cap rates too are really low, and I hear talk of, and interest rates are low, and I hear talk of cap rates even potentially compressing further.
And lastly, we've talked in the past about international financial reporting standards developments and the prospects of global convergence. What do you think will be the main development as it relates to IFRS in 2013?
So I think there's sort of two things. It's what we're waiting for to come out, and that's the final revenue standard, which I don't think will have a big impact. There's also the leasing standard. We're supposed to have another exposure draft, which of course stimulates a lot of conversation in our sector, so we'll wait for that. So that being the first part of what we're waiting for. Second part of that, I think, is standards that are already out there that came out in 2011 that became effective at the beginning of 2013. So for example, IFRS 13, which is fair value measurements, there's a fair value hierarchy that will impact the industry to some extent in terms of disclosure. So the farther down you are in the hierarchy, the more disclosure you have to have, and that's all based on where your inputs for the fair value measurements are coming from. So that's one of them. Another one that IFRS 10 and IFRS 11 specifically, so IFRS 10's consolidations might impact some of our entities, but in particular IFRS 11 with joint venture accounting, we used to have the option of proportionate consolidation for joint ventures. That no longer exists. So we're going to see quite a bit of a difference when we have to equity account for a lot of the investments that we were allowed to use proportionate consolidation for.
Great. Nancy, thank you so much for giving us an overview of the Canadian market.
Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.